It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. With me in the KFG studios, my business partner and fellow CFP, Josh Gregory, and special guest, Alysia Boehner.
That's right. Well, home and auto insurance rates are on the rise again, aren't they? Is that due to inflationary factors or is something more at work here? We're going to be unpacking that on today's episode with Alysia Boehner. Plus, we're going to share with you what can you do to help keep those insurance rates down.
That's right. That's right. Not have kids, actually, turns out. That's going to be the first tip. If you have any questions for the show, we'd love to hear from you. You can call or text us 574-222-2000. That's 574-222-2000. Online, you can find us right there, wisemoneyshow.com. New website in the works. I'm just going to throw that out there. It's going to be a while, but new website in the works. All over social media as well, YouTube channel. Go check us out, Wise Money Show. Right there. So, hey, welcome back, Alysia.
Hey, thanks.
It's been a long time, and I tell you, so I don't know if you're watching on YouTube or whatnot, but there's we were laughing before the show because I think the last time or a couple times ago when Alysia was on, I was needing to shut the segment down, and I was giving her the hand motions like, hey, wrap it up. And she thought I was saying, keep going. It was pretty funny, and it was totally my bad.
Panicked moment.
So,
we figured that out, by the way, so I won't talk forever. I promise.
We've got no. Oh my goodness, we're so happy to have you. And so okay, so here's sort of the backdrop. I was talking with some folks the other day, and we had spent some time down in Florida around spring break. You know, I had the spring break glow tan. That's gone now. But some folks were saying it's actually a bad time to move to Florida, which is crazy because, yes, housing market, it's weird and all that sort of stuff with interest rates, but you just think Florida's always booming. All these baby boomers are moving down there. But the reason was not that prices were going crazy or interest rates were high. They said it's a bad time to buy in Florida and people were moving out because insurance rates are so crazy. You can't find insurance. Insurance prices are doubling. And we think, well, that's on the coast. And they're saying, no, it's around the state. So I want to start with that, Alysia. What's going on with prices? Maybe you can even speak to Florida. I don't know. But we're also seeing inflation or rising insurance rates. So just give us some backdrop there. What's going on?
Yeah, so it's basic economics, right? Economics 101 says, what does a business need to run and run successfully? Profit. When you're making money, you're able to grow. And when businesses don't have profit, something has to change. So in the auto industry right now, companies are losing money. And whenever we see companies losing money, what's going to happen?
They're going to raise
rates are going to go up. Yep.
Is that because there's been more claims activity? Is it because when they need to repair a vehicle, it just costs more due to inflation and things like that? Like what's the underlying cause of all that? Do you know?
Yes, and yes.
All the above?
It's everything. It's like the domino effect, I think, that's happened. So labor shortages. And I know unemployment is down. People are saying unemployment's down. But trades, right? Those unemployment is not down. People are having a hard time finding tradesmen and plumbing and electricians, things like that for the homeowner sector. Auto repair workers, service workers, those are still hard to find. Mm-hmm. So with that labor shortage, it takes longer.
Yeah.
So that extends the length of time it might take to get a vehicle. Well, what does that do? Puts people in a rental car longer.
Yeah.
So rental car costs up 30% with most insurance carriers because of the length of time it's taking for repairs to be done.
Interesting.
Yeah.
So vehicles cost more.
Vehicles do cost more.
Number one.
Yep.
So if you're needing to replace, and that means parts and all that stuff is going to cost more as well. And then the labor shortage in the trades for sure. Overall unemployment is very manageable, very low, very strong. But I don't have that chart. But if you were to look at each sort of sector or area of the economy, trades. There's just fewer workers.
But part shortages too. So, microchips and electronic components that go into automobiles, those have been harder to find and have become more costly. So those things are up as well as other automobile parts. And whenever we see those things go up, we're also going to see rates go up too.
Yeah. That's very interesting. I honestly didn't even make that connection that Well, just maybe a month ago, we had to have some work done on Andrea's minivan, and there was only one place in town that could get the parts. And so we didn't have any choice. There was no shopping around for a good price or anything like that. No, it was painful. I'll say it that way.
And you'll kind of see in the industry, they're just saying the cost of a claim is up, the cost of a claim. All of those things together are going into it increase the overall cost of a claim.
And how insurance works, I mean, you might listen and say, well, they shouldn't have a profit. You know, I've heard the term insurance is a racket. No, if there's no profit there, if there's no spreading of the risk, if the insurance company is just going to eat all the risk, then there won't be any insurance companies anymore, period. So, right? So, and that's a little bit of what's happening in Florida, my understanding,
Yes.
is they've had a lot of claims and rebuilding is, building costs are up, supplies down, labor shortage, blah, blah, blah. And so I've heard, and Alysia, maybe you can speak to this, that insurance companies are getting out of Florida. There's only a handful left.
100%. So I think a lot of times people don't realize insurance companies carry insurance, and it's called reinsurance. So your typical home insurance company, they're only going to cover that claim up to a certain dollar amount. And then when the loss goes over that, they have their own insurance that will pick that up. And when you have a situation like Florida, where there's just been catastrophe after catastrophe that have been unprecedented numbers for a record number of years now, carriers aren't making it. And the cost of that reinsurance just keeps driving higher and higher and higher, which is increasing the cost for carriers. And eventually they're becoming insolvent and pulling out because they can't operate profitably. And that's the important part about profit for an insurance company. They have to be profitable. They have to put that money aside for claims for disaster situations. If they don't have that, we're all in trouble. So
That's right.
Yeah. What are some, well, okay, before I get into what can people do to help manage their costs, what sort of, and you might not know this, Alysia, I'm just putting you on the spot. What sort of percentage increases should someone expect? I'm just going to be honest, because I trust you and our team completely. I just got my renewals. And I didn't even have the heart to compare them to last year. I just looked at it and was like, yeah, because I do our 3 bank account system, which we preach. And so I've got the money set aside for insurance bills. So when they come up, I don't panic. And it's like, okay, I just paid it. I figured it was a 10 or 12% increase, but I never did the math.
Yeah.
What should people expect?
Okay, so it's as low as a few percent,
Okay.
and as high as 20+%.
Wow.
So I actually looked at my own. I never look at mine either, but I did look at mine. My home renewal just came out 16.5%. And y'all, I've not had a claim. So insurance agents, we're not immune. Ours is going up too. My auto's not out yet. I'm scared. I'm guessing my auto will probably be 15 to 20%ish, but that's, again, no tickets.
Was there a big increase last year? I feel like last year it was 7%. It was low single digits, even though we were seeing inflation on many things in double digits. And now it's like a ripple effect, sort of like the domino, like you mentioned, Alysia, that now it's double digit because the previous year expenses were so high.
Well, so I think, too, in insurance, we talk about 2 key things: frequency, severity. So when you talk about frequency, if a company loses money in one line of business, say auto, for 1 year, and it's just a little bit, they can withstand that, and they might not take that big hike yet. But if they see that year over year or quarter over quarter, they're going to be more likely to say, ooh, we got to make a change. And maybe it's a little more drastic. So the other thing that people need to know too is it's not just rates that change. So some companies, instead of just taking rate, they tighten underwriting, which means they're going to make it even harder to get insurance, especially in the auto market right now. We're seeing, as agents, having to jump through all these extra hoops if someone has a blemish on their record. And there's certain times that we're just like, man, you about can't even get a rate for somebody. You got to move on to the next carrier because they make it so hard to get a price even.
Well, we're seeing that in the overall. So part of what you're talking about, your credit score, said before, is your financial reputation. And you certainly have a reputation within insurance. Now, listen, they call them accidents for a reason. They're accidents. But being extra diligent, extra careful to protect your insurance reputation. On the financial side, your credit score, your credit reputation, We have record high credit card balances, or almost $1 trillion. We have record high interest rates. And what's going to happen, I don't know if it's happened yet, delinquencies are starting to increase. Credit card companies, they're not starting to tighten up, like you mentioned, that underwriting, but that would be the next thing to fall. And so, guys, I would just sort of expect that. Alysia, very helpful and fascinating, and yet hurtful. You're hurting our feelings. And what I'd like to do, though, is then turn it to what can you do to help keep your costs low, your rates low. So we've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time every Saturday morning, also on podcast at the same time, and a couple local radio stations at the same time as well, which is why the content's broken up the way that it is. But we've got cameras in the studio so that you can join along. Also, all throughout the work week, we've got Next Wise Step videos, 10-minute, 8-minute, something, taking one financial concept, applying it directly to your financial life from a comprehensive financial planning viewpoint to help you take your next wise step. So make sure you hit that subscribe button, turn on notifications, and if you like the content, leave questions below as well. We appreciate it.
Alysia, can you pull the mic?
Just a little better?
Just a little bit. I want to point it right
Is that better?
Yeah.
It sounded good, but it did look a little farther away. Okay, so yeah, honestly, right on schedule with where I thought we'd be. So let's get into, if this segment is devoted to the top things people can do to keep their insurance rates low, like if we had 5 to 6 like really good points, I think that would be helpful. Yeah. If we need to get into the next segment, we can, and that we'll be talking about trends, because obviously that plays right into, well, costs are going up, so do I need to cut coverage?
Yeah.
Okay. All right, let's do it. Insurance rates are on the rise. Maybe you didn't even do anything. No accidents, no claims, no nothing, and costs are going up. What can you do? It feels a little out of control. Can you do anything to keep your insurance rates low? That's what we're helping you with right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory and special guest Alysia Boehner. Every episode of the Wise Money Show is on podcast. Wherever you listen, just search the Wise Money Show. Subscribe or follow us there and rate the program as well. We appreciate it. All right, so Alysia Boehner, thanks for being with us. She's an insurance expert, been on the KFG team for forever, and just a wealth of knowledge. And we're putting her in the hot seat because it's not fun, right? It's not fun to talk about inflation, and we've had to do that with taxes, and it's not fun to talk about market volatility. So it's just, it's not fun. But prices are up, and when people get their insurance bills for their renewal, that's frustrating.
Yeah.
And that's why we always recommend work with an independent agent, right? Mm-hmm. So that they can serve you and represent you and look out in the marketplace and see if there's someplace better, if there's a better approach. If you're just working with one insurance company and they represent that insurance company, they're just going to tell you, well, that's what we have is the best. Now, as an independent company, we're going to look at all options. And part of that, though, is looking at all options for you to reduce the price, what's in your control.
Yep.
And so I want to talk about what are some of the things that people can do to help reduce or manage their costs.
Okay, so this is probably one of the most common, and I would say most clients have their auto and home policy together, but bundling is a big deal. We call it bundling. If you do not have your auto and your home with the same insurance company, you could be missing out big. And I think we see this a lot with, price shoppers. I'm going to get the best deal on my home, and I'm going to get the best deal on my auto, and the auto's here and the home's here. Sometimes up to 40% you can save by putting them with the same carrier. Now, sometimes there's a reason, right? There may be a reason they're not together. Could be that you've got too many auto tickets or something like that, or maybe your roof is sort of old on your home and a carrier won't take your home. So there are valid reasons to have them separate, but oftentimes you can save quite a bit by just putting those together. So that's one way. But maximizing discounts, that's the other thing I would say. Carriers give discounts for all sorts of stuff, you guys. Like, they want to throw discounts at people. So paid in full, if you can pay your insurance premium in full for the whole year on your home, Or even every 6 months on the autos, typically you can get that paid in full discount.
Okay, let's park there for a second.
Yeah,
Go ahead.
because you mentioned that in the prior segment that you're using the 3 bank account system as a way to every single month set aside some money for your home insurance, for your car insurance, life insurance, right on down the line. Even if the bill is only coming to you once a year, that's ideal because you're getting the absolute best price if you pay less frequently, right?
Yes.
Some people like it's easier to budget if it's just a monthly amount that's just pulled out of your bank account. It feels like autopilot and everything. And that's great. We love that. But you could replicate the same thing if you just get the right amount of money being set aside every single month to be able to cover these lump sum expenses.
There's no doubt it's easier if it's monthly. You take something. One of the biggest challenges in your present financial position is being prepared for the non-monthly expenses. So turn as much as you can into monthly, and then you can just work it in your budget. But as Alysia already mentioned, you're going to pay a little bit more for your insurances. Life insurance, same thing. If you pay it monthly, they're going to surcharge. So
how
instead,
much does it save you to pay just once a year? Or
It just depends on the carrier. So carriers are all across the board. Some of our companies, we feel like the paid in full discount is only a few percent. Other companies, it's a lot more. So it just kind of depends on the company.
But think about it. If your insurance rates are about to go up 10%, or maybe just did, and you can get a 5% discount,
Exactly.
right? That adds up. But the other thing that I was going to mention, and it sort of speaks to what I mentioned earlier, if you project out what your insurance costs are, divide that by 12, and automatically set that number aside every single month. I do that based on assumptions or averages or approximates or whatever, and therefore I feel a little bit more insulated if that price goes up versus I've got the exact monthly amount that the insurance company is pulling out of my checking account every month, and then all of a sudden, whammo, there's a 12% increase. You feel that instantly in your budget versus if you're saving up in advance over time, you're a little insulated from it.
Okay, and can I hop on a soapbox for a second?
Yes.
Don't pay late, people. Do not pay your bill late. You're going to get charged a fee of 20-some plus bucks. People who are doing this monthly, it costs them so much more money every single year. And some people, they have the money. They just aren't organized. So get organized. Pay on time. That will help you save some money there.
Absolutely. Love it.
Okay, so another thing that is a simple one. People do not call us and tell us when they pay off a loan. If you do not have a home loan, or some people have a home equity line of credit that they just keep and maybe they don't even use. A lot of carriers will give a loan-free, mortgage-free discount, but they're only going to give that if you don't have any lien associated with your home. Now, some people have a reason to keep that line of credit open and they need it. But if you don't need it and you're not using it, you might be able to save some decent premium by taking that loan off. Same thing on auto. Not all carriers, but some companies will give a discount on auto insurance if you don't have a loan on your car. And I'll tell you, people hardly ever call us to tell us when they pay off that loan.
Isn't that interesting? In fact, it's probably a conversation that we have, I don't know, it feels like weekly with clients about what kind of relationship do they have with their agent? How informed are they keeping their agent? How much does their agent really, truly understand about their full financial picture and everything? And a lot of people, it's just, well, it's an expense, and the agent is just the person who helps me, with paperwork and puts it in place, but I don't talk to them throughout the year.
Yeah.
I don't have a regular, planned meeting with them to keep them informed and all of that. So yeah, that's an important one. Your insurance agent should be one of your trusted advisors who's being coordinated into the overall financial plan. That's why, we're always preaching, this is completely biased opinion, but if your certified financial planner and your insurance agent can be collaborating together, then you've got more points of contact, right? More communication happening where one party can point things out to the others and keep those types of discounts flowing for you. That's good.
So another one, and this is one that we don't really push within our agency, but we're going to be offering it more and more, I think talking about it more and more, telematics. So the easy way to say it is the app, right? The app on the phone that you can save money, and the carriers are looking for certain behaviors. Now, people think that they're just watching, are you speeding?
Yeah.
Are you speeding, Mike Bernard, today on the bypass? That's not really what they care about. They don't care about if yes. Everyone is speeding. That's the real answer. Everyone is speeding. The companies know that. What they're really looking for are different driving behaviors that could lead to an increased likelihood of a claim. Hard braking If you're slamming on your brakes all the time, you're going to get rear-ended. It's just a matter of how quickly you get rear-ended.
Do they take into account if you have children in the back seat? Like if your driving habits are a little bizarre, are they aware that there's kids in the back seat? It's just fine.
Yeah. So slamming on your brakes,
Okay.
they're looking for that. Increased acceleration, they're looking for that. They're looking for the time of day you drive. So unfortunately, people who drive late at night, they're looking for that.
What about driving over the roundabouts?
Over them.
Yeah. Is that a bad thing? Too?
That's probably a bad thing, but that is not one they're actually looking for.
You'd think with all the the GPS and everything, they could account for that. There's a clue there, auto owners at Liberty Mutual. There you go.
See, I've always been afraid to have those apps because I know there's certain times of the day where I don't drive like I should. In fact, most mornings when I'm taking the kids to school and I'm the reason we're running late, I tell them, okay, guys, you don't drive like me, all right? and buckle up because here we go. We got to make up some ground.
I agree. But this is perfect for the person who says, I'm being punished for everyone else's bad driving and I'm an excellent driver. Well, put your money where your mouth is. Try the app.
Yeah.
You can follow it along online. You can see where it's stinging you, so you can really maximize your opportunity to save there.
Okay, so all kidding aside, I was one of the first people to sign up for this.
Yeah.
I did this early on, and I wonder maybe if it's fallen off or if we've shifted carriers and I should do it again here, but I loved it. And I definitely did get dinged. Okay, but I had a hard stop or a rolling stop or something that got me.
You ran over that roundabout.
Yeah. So, but I think I think ultimately it was a 12% discount. It started at 20, and then every little demerit kind of knocked me down. But I still got I think a 12% discount. My goodness, that's a big deal.
Yeah.
And listen, if you early on it was they're watching every move. They already are. The Google already is. If you've got an Apple device in your car or Alexa, they already are doing all of that. So might as well get some insurance discounts for it as well. Alysia, I don't know if you have more tips as well, but one of the things that people look at when they're looking at prices, well, do I have the right coverage? Should I change coverage? I want to talk about coverage trends. We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Okay. Completely forgotten to mention our sponsor, so I'm going to do that right now, and then we'll do that on air in just a second. So I want to thank Auto Owners Insurance for sponsoring today's program. They've been a sponsor of the show when we're hitting insurance topics. Been doing that for several years now, so we appreciate Auto Owners Insurance. Forgot to mention that at the onset. We'll mention it on the air here in just a moment. So, okay, good stuff. I'm glad you brought that up because I was going to ask you about it. And yeah, I think I was with Auto Owners.
Were you with Safeco?
Safeco.
I think you were a Safeco.
And now, yeah.
I don't think Auto Owners offers it, but Safeco does, Progressive does, Grange.
Liberty Bibbity?
Does. Who?
Liberty Bibbity?
We don't sell Liberty Mutual
okay.
for personal lines, you guys. That's business insurance.
My one that I have in my car can never hurt you. It can only give you a discount. So if you're a terrible driver and you have it in, it's not.
That was mine too.
So that's what they say, but the discount goes down, and that feels like they're being hurt.
Yeah.
Even though
it's worth mentioning if you didn't hear
they're not gonna
producer Lindsay. So one of the ways to encourage you to use the app is it's not going to make your insurance go down. If you are such a bad driver, you happen to get in an accident, go up.
Yeah.
If you have an accident with this app while you're in the trial period or whatever, your insurance rates will not go up because of it.
But the discount might go down.
Yeah.
And that will
Right.
feel like your rate is going up. So
All right. Do you have other tips that you want to hit?
I have just general discounts for seniors, youthful drivers,
Yeah,
good
let's hit
student
those.
discount.
Can we talk about credit score and its impact on insurance rates these days?
And then I had things like revisiting deductibles.
Which will feed right in.
And don't assume that shopping will lead to a better rate always, that kind of stuff.
Perfect.
Yeah.
So let's hit those sort of, in rapid fashion, and then that'll lead right into coverage trends. So, all right, third segment. If your insurance rate has gone up, should you change your deductible? Should you drop some coverage, change some coverage? We're going to ask the expert. We've got that and more. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory and special guest Alysia Boehner. Every episode of the Wise Money Show, is on the YouTube channel, as well as a lot of other content. So go to YouTube, search The Wise Money Show, follow us there. Also want to mention, thank you to sponsor Auto Owners Insurance, to sponsor the insurance topics that we hit on The Wise Money Show, so we appreciate them. And all right, Alysia, we've been talking about insurance rates going up. Part of that's due to inflation. Well, inflation actually is caused by something, and we printed $5 trillion, not we, but the Federal Reserve printed $5 trillion, stuffed it into the throat of the economy, and we're all still grappling with it. That's going to increase prices. At least we're not Argentina, which is currently at 101% inflation rate. That's real. So maybe it's 104. But we're talking about some things that you can do to help bring your costs down, or at least manage your costs. There's a few more.
Yeah.
So go ahead.
Okay, so other discounts that companies offer, if you have a young driver, ask your agent what discounts are available. Usually there's a good student discount. There may be a discount if your college student is away at school without a car. There are discounts for taking an online class for young drivers. So there's all sorts of discounts. Again, back to the put the app in the car. I think that is the perfect thing for a young driver. Alysia Boehner, 100,000%. She will have that thing in her car, no doubt about it. Big Brother, not just Big Brother. Mom's going to be watching.
I know.
On that
I mean, for our oldest, she's got a phone now, and so we've got the device tracker thing, like the Find Friends, which could be retitled as Stalker app. I mean, so you're already going to use that. Might as well get some insurance benefits.
And then for those of you who are wise, because maybe you have a few more years on you, we also have some discounts for people that are over a certain age and maybe don't have any kids in the house anymore. There are online courses that if we get into like a really elderly group of people that they can sometimes take to lower their premiums as well. And then some companies will just give a discount if you write life insurance. So our sponsor, Auto Owners, they are one. They give almost 4 to 5% discount off of your auto and your home insurance if you write life insurance. And it doesn't have to be a ginormous policy. It can be a very small life policy that you can put not just on you, but maybe a kid or a grandkid or something like that.
In fact, many of those policies are really easily written. Simple issue, as they call them. They're not asking you lots of different questions. Now, the questions they do ask will get you disqualified.
Pack a punch, right?
That's right. So it's almost a yes or no type of an option. But these policies don't have to cost a lot. In fact, sometimes the cost of the life insurance is less than the total discounts that you get, and some or close to. And so it's almost like getting the little bit of life insurance for free, plus maybe some discounts.
And especially those who have, again, the young drivers in the house, or if you live in Michigan. If you live in Michigan, your auto rates are already high because you're in that unfortunate no-fault state. Those are the people that I would say, if you haven't looked at it and you're specifically with Auto Owners, I would revisit that and ask about it.
What about, we talked about the financial reputation earlier, credit score. How does that play in? And is this, again, just because rates are on the rise, okay, that's extra motivation to make sure you're managing your credit score?
Yep. Okay, so in insurance, we're not looking at your credit score. We're looking at your insurance score.
Yeah, two very different things?
Two very similar things,
okay,
but they look at different factors, and each company can weight those factors differently. So like the number of open accounts or how much debt you may have, each company can weight that a little bit differently, and they call it an insurance score versus a credit score. But yes, the better that insurance score is, the better your rates will be ultimately.
And is your credit score part of the insurance score? Like, are they pulling your credit? Are they looking at, how responsible you've been with other areas of your financial life and
they pull your insurance score, not your credit score.
Okay.
Gotcha. For folks that are listening saying, you know what, I haven't needed credit in a long time. I don't plan on it. I'm going to lock it down to avoid theft or whatever. Does that affect someone's insurance score?
Yeah, so they do look at credit factors. That's the answer, is yes. And you may even get a little letter in the mail saying, hey, we've looked at these factors when we're looking at your insurance. But the other thing, too, that sometimes can hurt people, and I don't think this is fair, it's a broken system. If you don't have a credit score, you're going to kind of fall into this weird limbo land that you're probably not going to get the best rate, which is kind of a bummer.
Yeah, that's what we've passed along. Because I love the idea, if you don't need credit, avoid the risk of identity theft or credit theft or whatever, and just lock it down. But I have always warned people, you might pay a little bit more in your insurance. So you've got to weigh the pros and cons here.
Yeah, poor Scott Boehner, we had to get him some credit because when we got married, he had no score, no hit.
He's too
he
responsible.
pulled his no hit. He is.
What about kids? So, in our house, we're like right around the corner here.
you're
We're
right
going to
there.
have youthful drivers and all of our friends. It's like what everybody talks about. How bad is the insurance going to be when
not
little
good, you
Johnny
guys.
turns 16?
It's bad.
I know, and I'm kind of bracing myself for it. But as long as those kids are part of our household, then are they still building their own, personal insurance history, or are they kind of riding mom and dad's coattails a little bit for a while?
They're really more riding mom and dad's coattails. In fact, we usually would not encourage someone to be on their own policy until they're probably 21 or older, if we can help it. Okay. Because them getting their own insurance when they're under that age can be really difficult, and the rates are always not pleasant.
Yeah.
So that is not necessarily
Am I
great.
remembering back? So this is going back, decades now. I'm feeling old. But was it age 24, when it was like a magic age especially for guys, when
25.
25?
I think, and it's different for every carrier now too. It's not necessarily one.
Finish the thought. That
Well,
insurance costs start coming down.
Like there was a noticeable difference. You're no longer considered as much a youthful driver or an inexperienced driver or whatever.
I think that number used to be 25. I don't know if that's still the magical number or if that number's
I
changed.
think it's
to be
35.
honest.
There's prolonged adolescence
35.
going
That's
on.
right.
40.
Failure to launch.
Yeah, failure to launch.
40. Okay, one of the temptations, especially, I go on record. I've shared this before. There's no question. The insurance world has a corner on the best commercials, best TV commercials.
The worst, Mike.
The best.
They're the worst
Not even
commercials.
close. And you know what I love? Even the serious carriers are now going humor, and I really appreciate it. It's just so enjoyable. But one of the challenges, they always promote price and price and price. And one of the things, and so price is important. Don't get me wrong. Oh my goodness, it absolutely is. The more you pay in insurance, that means you don't have as much going towards either fun today or saving up for the future or tax benefits or whatever, right? So price is important. Coverage, though, is most important. Get the right coverage first, then get it at the best price. And I would say not the best price every single moment, best price over your lifetime or a long period of time. We don't want to sacrifice coverage in an attempt to try to improve the price. Alysia, what are some trends with overall insurance coverage? Back in the day, it was 100-300, which is insurance speak for on your auto insurance, $100,000 per person, $300,000 per accident. Mm-hmm. When we started the insurance agency over 15 years ago, that was the norm, and we fought against it. Mm-hmm. Is 100-300 still the trend, or is it higher now?
I mean, I tell you, I see it all over the map.
Do you?
Because of name your own price and those types of marketing to consumers, they are, unfortunately, one of the byproducts is often it's let's fit your coverage into this budget. And when we do that, you're sacrificing coverage because they're going to do what they have to get your business. And if that means slashing stuff that you don't even know is being slashed, they're going to slash it. So that is one thing we see.
The other one, pay for what you need. Well, I don't know what I need until I have an accident.
So one trend that we are seeing, especially in the state of Michigan, is increased uninsured driving. So that makes and underinsured motorists on your auto insurance all the more important right now, because when people's budgets are pinched, what do? They start slashing stuff. They start dropping coverage. And one of the things they might drop is the underinsured motorist. That's optional in a lot of states.
Which means if you're in an accident caused by that other person and they're driving without any coverage or not enough insurance,
Correct, yeah.
It's ultimately your insurance company that's going to step in to the rescue for you.
Correct.
But that's coverage that you're paying for.
Yes.
And you're saying that that line item that goes into your overall price tag has gone up because of other people's actions.
Yes.
Wow.
So that's one thing that we're seeing. Other trends in the home industry, I would say we're seeing increased deductibles on homeowners insurance. We're seeing a lot of the more captive markets going to a percentage deductible, which is kind of tricky because you don't realize your house limit's going up every year, and now your deductible is going up every year with that.
I want to actually circle back to that because I've seen that trend as well. I want to get your opinion whether you think that's a good idea or bad idea, what it does to the price. And then we were going to get into a few other kind of topical seasonal items with insurance. We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Okay. Yeah. So is that like required now? The percentages?
No. Well, I don't know. I can't speak on behalf of State Farm, but they are doing percentage.
Oh my goodness,
for sure.
It seems like every State Farm policy that I've seen has a percentage.
But the other one is wind and hail. I saw a client the other day. They had a $1,000 deductible. Wind hail deductible was $10K. They had no idea.
Wow.
So they're adding.
That's
more
like
than
no
half
coverage.
the roof, right?
And that one is really common. We are seeing companies require a mandatory wind hail deductible that's not to be less than a certain dollar amount.
Wow.
Yeah.
Interesting. Mm-hmm. And I'm sure all these things are disclosed in some letter that they got, right? But it went straight in the trash because
you got it.
Yeah, it just looks like junk mail.
Yep.
Right. Wow.
Or it just happens.
Or it got added into the contract.
It's in the contract that once your roof is over a certain age, you go to either actual cash value on the roof or that deductible has a mandatory wind hail deductible of a certain percentage after the roof is over a certain age, and people just don't realize.
Here's the thing. I have to capture this right now, and it's not on the radio waves, but hopefully you're still listening. That's why you need an independent insurance agent. I didn't understand half of what she said, but you heard the passion, and the empathy, and that she cares, and that's why you need an independent insurance agent on
sometimes
your team.
we can't prevent it. You may have to have actual cash value, but understand what it means if you have a claim, because that's going to be a big deal when a claim happens to that roof.
Yeah.
Oh.
Not to talk shop here, but that would be a helpful thing for an insurance agent to track. Mm-hmm. You know, if we ask a question up front, how old is your roof? And we do. And we captured it, though. Mm-hmm. And they start crossing a line on, okay, my roof is now 20 years old. Mm-hmm. Can we inform them that based on your policy? Because otherwise that just goes under the radar until there's a claim, and then you realize, oh, the insurance company is not paying for a full new roof. They're giving me actual cash value instead, which is less.
Yeah.
Yeah, that's a
big deal. Will they do a metal roof?
You get a discount for metal roof or
shingles. No. Like if there happened to be an accident on a roof and it needed to be replaced, would they replace it with a metal roof?
Like, kind, and quality, Mike Bernard. Kind, and quality.
Like
but you can pay the extra to get your steel roof.
I bet your neighborhood doesn't allow steel roof.
It's funny you bring that up because I was voted, in the high school and stuff, they vote most likely to be this, whatever. I was voted most likely to live in a suburb. I'm serious. That wasn't an official thing, but my friends were. A friend actually that was moved and lived in Manhattan, I think still there, said, "Oh no, there's no question you're going to go live in a suburb somewhere."
Right. You know
which is another way of saying most likely to never have a steel roof.
Well, so there's one house in the neighborhood, where I live, there's 3 neighborhoods connected. It's really weird, but there's one, and I just noticed it looked good. Good. There's one in the neighborhood that has a steel roof. So, what are you going to say? What are you
completely in violation of the
I don't know.
Homeowners Association?
Most likely to star in the Round Barn Theater in Napanee?
No, but this won't surprise you guys. Fastest talker.
Oh
wow.
Well, listen, I can give you a run for the money.
I got that one.
We should do.
Were you
some
using
sort of
acronyms back then too? Just to speed up your communication?
I don't think so. I wasn't the acronym queen that I am today.
You are today.
Yeah.
All right. So, 4th SLTP. 4th segment, land the plane.
Oh.
Sorry, I was just trying to come up with an
acronym.
An acronym.
I didn't even know what you were doing.
I did. That was
you just confused me.
Thank you for the effort.
Took a lot of energy there. All right, so 4th segment.
I think that's the next team day.
There you go. Yeah. Who can talk the fastest?
There you go. We did
like
typing. Now it will be talking.
All right.
Definitely not Kevin.
Not a useful skill.
We'll pick up coverage trends that will lead right into umbrella, and then we can get into some seasonal stuff. We've got a second show. Obviously, that's going to be focused on commercial stuff, but we can talk about seasonal things there if we need to. So, thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. Here with me in the KFG studios, Josh Gregory, and special guest, insurance expert Alysia Boehner. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at. We are there as well. Search The Wise Money Show. If you're not following on YouTube, I'm just going to tell you, you missed some bonus content there that was, I'm going to say entertaining. So make sure you check out the YouTube channel as well. And we just leave the cameras rolling, mics on during breaks, and check that out. All right. Let's stay on coverage trends. We left off with a coverage trend being deductibles. Now, I often say, well, if you have your financial house in order and you've got that emergency fund and you've got that budget and you're working your 3-bank account system, then you've prepared a little bit more for a financial changes, calamity, or a claim, right? Yeah. And that discipline and structure gives you the benefit that you could afford a slightly higher deductible, and therefore you should receive the reward of lower insurance premiums. And so are you guys looking at and running that cost benefit analysis for folks? And are you seeing trends with deductibles? We talked about percentages as well. So go ahead.
Yeah, so I do think we are generally seeing clients accept higher deductibles. When I first got into the business, $500, that was the home deductible of choice, right? Now it's pretty regularly $1,000 to $2,500 that we're seeing on home policies. We wrote a kind of a hybrid builder's risk policy the other week with a really high deductible. I think it was $50,000 or something like that. So some people are even taking $10,000 deductibles.
Okay,
on
what's the trend like?
But ask your mortgage company. Don't forget that, because your mortgage company or your auto loan, if you have a loan or a mortgage, they sometimes will have a cap. You can't go higher than this. So make sure you do that check before you bump it really high.
I suppose that would, I hadn't heard that before, but I suppose that makes sense. I mean, they're on risk as well. Mm-hmm. Right. So is there, a $1,000 deductible to $2,500, that's 15, if my math is right. That's $1,500. That's a big jump. Is there a step in between, or is that like the norm? If you go above 1,000, then it's going to be $2,500.
So sometimes there are steps. There's actually a $750 deductible. We hardly ever write that, but it just depends on the carrier. $2,000. Some people can do a $2,000 deductible. So it just kind of depends on the company.
On the auto, is it still $100 and $500? Is that a lot? Do people
pretty much? So your comprehensive, which covers things that we usually say are outside your control, like theft, fire, vandalism, etc. That, when you change that deductible, it really doesn't push that premium up or down all that much. So keeping that deductible low still might make sense. The collision deductible, it really just depends on your history. So unfortunately, for people who are squeaky clean and they really have a wonderful insurance/credit score, or they maybe don't have any tickets, they haven't had any claims, when you move that deductible, it doesn't move as much because they're already getting a great rate because they fit that mold that the company wants. Oh. But if you've got youthful drivers, if you've got a lot of blemishes on your record, you maybe have a lead foot, look at that collision deductible. That might help you. Yeah.
This is one of the places where financial planning really, it should be, in my opinion, shedding some sort of light on what the right answer is for your insurance.
You have to be able to afford the deductible, right?
That's
100%.
Exactly right. So it's a function of how do you have your 3-bank account system set up? How are you managing your cash flow on a monthly basis? Some people may have enough wiggle room or margin in their financial life that $1,000 deductible, they could absorb that over a relatively short amount of time. Mm-hmm. Cut some costs here, don't go out to eat quite as much there, and the deductible's just fine. Others, it's no, I wouldn't be able to absorb that. So to me, it's a function of how robust is my emergency fund that's built up. Could I handle some sort of a crisis in a car situation or a house situation, that kind of thing?
There's other things, though, too, related to that maybe aren't as big of a financial decision. So towing is one. People want to use that tow coverage all the time, but a lot of people can afford that $50 or $100 for a tow. If we have people who have multiple tows, that can really impact their overall rate, and or the coverage might just get taken away if they use it too much.
I feel like the reason people pay that and why that feels important is if I get stranded, I have someone to call. And that's pretty important. So
you can
But you
accomplish
have
that
someone to
with your
call.
cell phone.
That's
Mike
right.
Bernard.
They'll all take your call, I assure you.
yeah.
They want your business.
And because of the labor shortage, you're going to sit and wait anyway. I hate to tell you.
And it's not like you get a
Call your dad.
Call your dad.
What about, so speaking of insurance trends, and speaking of how this is a financial planning decision, as you are building wealth, and I can't, if I could draw the picture with my words, you're pushing this big boulder up a hill. And insurance protection, as you make progress, insurance is putting then stoppers down that if you lose your grip on this boulder, it's not going to roll all the way down to the bottom. It will stop out at it will go down a little bit, right? There is going to be a deductible or some financial pain if you have some challenges, but there's a stopper in place. As you're building that wealth, pushing that boulder up the mountain, and your net worth or your income rises, net worth, exceeds $1 million, income, is rising. An umbrella policy is something that your financial planner or insurance advisor is going to recommend. And this comes, it's separate liability insurance. Alysia, actually, why don't you just briefly share what an umbrella policy is? And then, but I guess where I'm going is, are we seeing those prices increase? And is a trend that people are dropping those, even though they need them, simply because they just want to save costs?
So there's two types of policies you can purchase. One is an umbrella. Sometimes that's the term just used. The other is an excess liability policy. An umbrella will cover more than maybe what your auto or your home policy might cover. An excess liability policy, they call it following form, meaning if it's not covered by the home, it's not covered by the auto, it's also not going to be covered by the umbrella or excess liability policy. But so there's two kinds you can pick, and it just depends on the carrier which form they take, whether it's the umbrella or the excess liability. But I actually feel like more people are open to them. And I think that's because people are just more aware of lawsuits. There's a lot more in the news and media about large lawsuits happening. And I think people are becoming a little more educated about the importance of why and how that can really impact them. So it is incredibly important if your net worth is rising or you're a high income earner, or even if you're not. If you've got those young drivers, if you have a swimming pool, if you have a lake house, there's risk factors we look at that maybe you just are higher risk for a claim if you're a business owner, things like that.
Yeah, the whole idea behind an umbrella policy is if you look at the protection that your homeowner's policy offers or your auto policy offers, that is liability, protecting the other person, someone being injured on your property, someone being injured because of an accident that you caused. That's liability protection. And there are enough accidents that can happen these days that could overwhelm your auto policy because your auto policy has limits on it, right?
And let's talk about the cost of healthcare.
Yeah.
Right. So that is a driving factor in why that's so important, because a slip, fall, an ambulance ride, the costs for that are just going crazy high.
That's exactly right. And so if it's possible that you could cause an accident or your youthful driver could cause an accident and someone else is injured or worse, the potential payout is so high that your auto policy may not cover it. And that's where you put an extra layer of protection over the top. We call it umbrella insurance as a generic term quite often. But that might add another $1 million worth of protection for those other people that could have been injured. And that might sound like, good grief, that must cost a lot of money. No, it doesn't.
It's like the best deal in insurance. It's usually a couple $100 if you're just a normal household with auto, home, maybe as high as $350. Now, the more stuff, because like an umbrella, right? What does an umbrella cover when it's raining? Whoever's standing under it. So what does an umbrella policy cover? Whatever we schedule or we list on the policy underneath it. So if you've got a bunch of boats or ATVs, your cost is going to be more, or a lot of cars, but it's still, I think, one of the most important coverages and a good value, I would say.
Because by definition, it has to be a major claim.
Correct.
Which is hopefully an unlikely claim, but if it happens, the consequences are significant. And so if your auto policy is maxed out and now we're reaching into the umbrella to help make that other person whole, man, you're glad you had it if it comes to that kind of an emergency.
All right. I hope this discussion has been helpful. And one of the things that I'd point back to is just the need for an independent insurance advisor that can represent you and help you shop in this challenging environment and make sure that as you look for discounts, you're not cutting coverages that you need, but then also how critical that is that it's part of your overall financial plan and that your CFP and your insurance advisor are working together complementary and collaboratively. So want to thank Auto Owners Insurance for sponsoring the program. Alysia, thank you for being here. Alicia's back next week for a continued insurance discussion, so check that out. But on behalf of Alysia, Josh Gregory, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.